just quickly mute everyone, and you guys will be unmuting yourself one by one in order to throw your questions. Né? So yeah, without wasting any time, let's start. If you want to ask a question, please unmute yourself and shoot your question.
Good day, Brian. I have a question.
Yeah, shoot.
You mentioned something. You said that sometimes there is no time for a first layer.
Yeah.
So how do we identify the first? If there's no first layer, how do we go about it?
So you just then wait for the breakout of the footprint. If
Then
there's no
spot divergence.
Yeah, then spot divergence. So you don't have to be stressed about it. Just look at the footprint and do what you need to do from there.
Okay, how about the entries?
Re-entry is just a matter of spotting divergence. We use divergence technique in order to pile up trades on top using the divergence method.
Okay, thank you.
All right, cheers. Next one.
Hi, Brian.
Hello.
I also have a question. So after executing a trade, when do I close my trade?
So you close your trade after the breaking out of the first layer. Remember I said when the market it is starting to go into the opposite direction, it will break the first layer. So the way this thing is structured in a way that you break the let me erase this and draw a scenario for you. This is my structure. So from there, I will draw a footprint line. And after that, I'm going to be drawing a first layer line. Now, after the market breaks the first layer line, that's when we're convinced that the market is about to go into the opposite direction. Because if the market has high momentum, it must continue going down. But if it has lost momentum, it must break and go into the opposite direction. That's just simple practicality. So now what we wait for is to wait for the breakout that happens. After the breakout happens, wait for the market to do what? To make a retest or pull back. Then from there, that's where we're going to be spotting the divergence we're talking about using the stochastic. The divergence will be spotting it between the previous point and where the market is currently at right now. And take a buy. When we take a buy, the market will go up, and as it continues going up, we know market doesn't move in a straight line, so it will make some pullbacks. Those pullbacks that are the ones that we're going to use in order to add more trades, meaning in order to make re-entries. So as it keeps on going up, we use the same technique in order to add re-entries. Now from there, after you found a structure like that, that's when you start drawing your same lines again, your footprint line and first layer line. Reason why are you drawing them? So that you can be able to know when to actually pull back or to pull out, meaning when to close the trade. So now in this case, the footprint, the first layer line, if it decides to be broken, let's say here, immediately when the market breaks the first layer line, as I've told you that the first layer line shows that the market is about to go into the opposite direction. So there'll be no definite need for you to keep on holding the buy trade while the market is telling you that it is about to go down. So that's how we close using the first layer line. Does that make sense?
Thank you very much, Brian.
All right, no problem.
Sure.
Let's move to the next one.
Hi, Brian.
Yes, what's up?
How are you? Can you check it GBP USD, please?
GBP USD. Okay. GBP. And what are you looking at? Are you looking to buy this pair? Are you looking to sell it?
Yeah, for
What's it?
buy for our temper.
4 hour. Okay, yeah. This consolidation has been
Not for buy, for sell, Sorry.
all right. Because first of all, what I'm looking at is I don't think this thing can. It's selling. The reason why that is because when we take it from the back, you see that's for buy. After that, it did buy. After that, let's spot the footprint. After that, we spot the first layer. After that, try to enter SR here. As there was a consolidation, let's check what is happening by going to 1 minute. Into the much detailed form. On 1 minute, okay, let's say for example, you were on this one and you spotted this. So I would say when this one broke, it was a forced breakout because it went in again. You could say it officially broke there, and after that it went down. So if the divergence was spot there, could have took it down. After that, this what happened. After it happened, just a matter of continue going up like this. So I don't think this thing is selling because
Okay, thanks a lot.
no riches. Yeah, I don't think it's selling because even there was a footprint going up. So a divergence. Because if you can be able to check from this point to that point, from this point to that point, you can see if you would have entered here, you would have managed to eat something there. But like what I normally advise that once there's just too much consolidation, focus on footprints that are setups that are very much clear. There's no need to sort around this headache because this can be a headache if you're not perfect with spotting the footprint. It can just mess up with your mind because the market is consolidating like crazy, and as it consolidates like this, the market is more likely to make some false breakouts that are a lot. So after this buy, that's when it started doing some crazy things. After this footprint, where there was a buy here, it did go by, but it did some crazy shenanigans here. Or what could have saved you? Some could have done this. After the first footprint, of course. First footprint, let's zoom it in.